Hello, hi, and welcome to another edition of What's Moving the Markets for FxPro by Phillip Konchar. I'll wait for a couple of more minutes for people to come in and join us, and then I'll start this broadcast properly, and we can go through a few slides, just some disclaimers and some information about your broker FxPro, and then we can go into the live market and talk about what's happening at the moment, and maybe look at some charts, look at some levels, prevailing trends, sentiment, and basically anything that could be of interest to you, anything that could be of interest. So hopefully you can all hear me and you can see the FxPro slide. So I'll just ask you that. Feel free, come into the chat section, and then we can have a little conversation there. I'm just checking that basically you can see this screen with the FxPro logo and slide, and that you can hear me okay. Now, Daniel, Graham, Kevin, Murza, Paul, Wilbert, anybody else who is watching us, you are more than welcome. Okay, so I'll start the broadcast slowly as it is. Guys, I would really encourage you to come in and ask me some questions. Let's keep this very informal because if you guys ask me what could be of interest to you, then I'll try and cover it from the financial markets point of view. And then we can even look at some charts together. And obviously, you need to tell me what time frame might work for you before I get excited and start talking about something that's really of interest to me. So my name is Phillip Konchar. I'll be your presenter for today. If Wilbert is saying yes, excellent. I'll be your presenter for today. If you need to get hold of me, you can get hold of me on that email below, philip@tradercast.com. Alternatively, you can speak to your account manager at FxPro and they'll put you in touch. Now, for legal information and disclaimer, obviously, if you've seen any of these webinars before, not just done by myself, but any trader, market analyst, economist, brokers, they always start with a big disclaimer. As always, FxPro are your broker, and they are execution only broker. They're not advisory type broker. So basically anything that we discuss here should not be seen as an investment advice, because it does not take in consideration your personal circumstances and investment and trading objectives. Also, what you should realize is that if you're trading through FxPro, you are trading through a leveraged or a margin a trading broker. So you must understand that what leverage is and what margin is. And if you don't, please speak to your account manager and ask them to explain the risks associated with trading on margin or using leverage. Also, you can read this and see it for yourself. Now, from the regulation point of view, FxPro UK Limited is authorized and regulated by the Financial Conduct Authority. As FxPro Financial Services Limited is authorized by Cyprus Securities and Exchange Commission, and they also have a presence in South Africa as well. They offer negative balance protection, segregated accounts for their clients, and protected clients' funds. Yet again, if you need to know more about that stuff, feel free to speak to your account manager. This big potato head is me right here on the screen, and what I'm saying here is that what I'll be talking about here today are my opinions and experiences. Since I do not work for FxPro, I'm not one of the account managers. I would just like to say that if I do get excited about something and start talking with a kind of a higher rate and a faster pace, I'm not advising you to do anything. I'm literally just pointing to you what the prevailing trend is and what are the levels that could be of interest to you, because we will go into a live market and look at some of this stuff as well. It's up to you to make your own decision. It's up to you to decide if what we are doing here, the analysis that we are providing you with, either technical or macro or fundamental, are corresponding to what you believe is correct, and before you start acting upon them. Let me just ask you, I've done this a few times before. I actually placed this golden rules for new traders screen, and this was usually well received. But let me just check. Do you need me to go through this, or are you quite familiar with this? Do you need me to go and talk about this in more details, or you're quite happy? Wilbert is saying yes, he would like me to go through them. Wilbert is so far the only person speaking to me, and I'm feeling sorry because, guys, let me just tell you something. I am talking to the screen at the moment. I do not see your faces. I cannot read your body language or facial expressions. So therefore, I do not know if what I'm going to say is I'm okay with this, Kevin is saying. Thank you, Kevin. I don't know if this is relevant for you or not. So the only way I can sense that what we are talking about here is and doing here is relevant for you is if you chat and if you talk to me. So I would strongly encourage you. Okay, so what I'll do is I'll just run through this very, very quickly. But basically, rule number one, never add to a losing trade. This is no brainer. Okay, do not average down. That doesn't work. Never lose more than 1% of your trading capital on any one trade. Predetermine the amount of risk that you are able to carry and stick to that. Some people can cope with 2%, 3%, maybe even more. But the more risk that you take on, the less trades you can take before your account disappears. So the idea is that you should risk very, very little. Never trade anything that you do not understand 100% of the time. Paul is saying never hurts to be reminded. Excellent, brilliant. So I'll just run through this very, very quickly. Basically, if you do not know what it is, don't trade it. Okay, if you do not understand what financial news are impacting the volatility in particular market or currency pair or stock or equity index or commodity, do not touch it. If you do not know what the minimum price move, what the average trading range is, if you do not understand how much margin you need to deposit, and when do these contracts expire if you trade in futures, do not jump into this trade. Find out all this information before you decide to trade something. Otherwise, you'll be surprised. You might place a small trade thinking, okay, it's only whatever, a £10 per point or a lot per point, and then realize that moves very, very fast and it's very volatile. So really, really understand what it is, and especially what financial news and data are coming in and impacting the sentiment and the value of that particular financial market or instrument that you wish to trade. Now, trade in the direction of the trend in your trading time frame. This usually confuses people, but basically, we all trade in a different time frames. Some people trade in end of day time frame. They buy and hold. Some people trade in intraday timeframes. They look at 4-hourly chart or hourly chart before they decide to trade. Some people trade in shorter term timeframes, 1 hourly, 15 minutes, even scalping in 1 minute. So you must understand what time frame do you see on your chart, what time frame is basically the basis for your technical trading setup, and then you must understand what is the prevailing trend for a 2 higher time frames. So if you're trading in an hourly time frame is falling and coming to some sort of support area of 4-hourly time frame and daily time frame, because daily time frame is uptrending, 4-hourly is uptrending, but hourly is falling. And if in the past, every time that price came down to the support, it bounced off that level, maybe there is a chance that it might do that again as well. So you must understand what is your time frame that you trade in and what is the time frame that confirms the existence of the trend. Majority of the people tend to go counter trend. And newsflash here for you guys, trend has a greater probability of continuing rather than reversing. Okay, the trends do reverse, but they tend to stay intact. Once they're confirmed, once the sentiment is there, they tend to stay in that range for a very, very long time before something significantly changes. Now, only look for low risk, high rewards trades or high probability setups. When you do not have signals, don't trade. Basically, look for a disproportionate amount of reward for a definite amount of risk that you want to take. So risk small for a potentially larger return. 3 to 1, 5 to 1, 10 to 1. The bigger, the better. Okay, that means that you can be wrong over and over and over again, following the same setup, following the same set of rules, same technical trading system, and then stay solvent because you can have 1 or 2 or 3 winning trades which pay for all of your losses and make money, rather than going for 1-to-1. I'm risking 100 quid to make 100 quid. That doesn't make sense. I'm risking 100 quid to make 1,000 quid. I'm risking 100 quid to make 500 quid. That makes sense. 5 to 1, 10 to 1, 3 to 1, that kind of stuff. Trade your plan, your system, your signals, the chart, and price action, and not your opinions, bias, or predictions. This is a difficult one. Majority of the people, when they're new and when they come to trading, they have a firm belief that markets should do something, or some particular share should just explode and go up forever, or cryptocurrency, or that markets should reverse and do something. Try and stay away from that. Do not trade what you believe, because if you do that, you will very quickly go and find in social media in particular, or in a range of reports which are readily available, something that justifies your point of view, rather than having a holistic view of the market that you want to trade. Trade what you see, not what you believe, because even if you are absolutely correct in your prediction, markets can stay irrational for so much longer than anybody can stay solvent. Eventually they will go where you think they might go. Something will trigger that, but in the meantime they can carry on going in the opposite direction for a very, 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 very long time. And that's the difficult thing to grasp. So trade what you see. If trend is going higher, do not try and short it. Buy the dip, buy the breakout. If trend is falling, there's some substantial amount of bearishness in the market, negativity. Do not try and catch the falling knife. Short the rallies or short the loss of current significant lows. That's what I'm trying to say. Okay, find a trading methodology that fits your personality. This is a difficult one. We all have different personalities. Some people are more suitable for trading in a shorter term time frame, more aggressively, more frequently. Some people are more suitable in following a preset, predetermined, hard-coded set of rules, and they can just wait for that to happen, and they can sit on their hands for a number of days and weeks before they get that trigger. We all have different personalities. Understand what works for you. Test something else, hopefully in your demo account. And when you get consistent and a proven audited track record that what you're doing, following the same repetitive system, is producing the outcomes that you desire, then stick with that, because that works for your personality. Don't trade before you have a complete trading plan, including rules on entries, exits, and risk management. This is hugely important. Some people just enter into a trade and say, oh, where should I put my stop loss? Or I don't know where my take profit is, or something like that. You must know exactly where everything is and it should be based in the same time frame that you saw when you traded. I'm going to repeat this again. Your stop loss and the expectation of the return should always be in the same time frame that you saw when you initiated your trade. If I'm confusing anybody with this, please tell me, I will explain it. But this is hugely important. Loads of new people, when they come to the trading arena, they place the trade and then they go and change the time frame and see, oh, they look at a daily, a weekly, and they think that market will go somewhere. Eventually it will, but how many 1 minute or 5 minute or 50-minute candles do you have in one trading day, week, or month? So your profit and your risk should be associated with the same time frame. Now, the size of your winning and losing trades determines your trading success, which is obviously quite self-explanatory. And the last thing is your risk management rules will determine the success of your technical trading system. And what I mean to say here, guys, is this. We all as traders, and especially biggest frustration for the traders, and this is the last point before we go into the live market, is with the fact that traders expect a definite, predictable, definitive outcome out of every single trade that they place, which is based on some sort of technical analysis or a trigger given to them by indicators or some kind of mechanical setup. Okay, by their nature, they're not designed to do that. They can give you a probable outcome, but not definite outcome. So the idea is that even if you're playing 50-50 game and you're flipping the coin, you would think that, you know, you have 5 chances to get heads and 5 chances to get tails. But we all know that if you're flipping, you might get 8 tails and 2 heads, followed by 2 tails and 10 heads, and so on and so on. The number of winning and losing trades is random. So what I'm trying to say is, when we were talking about risk 1%, so basically when you have this sequence of losing trades and you're risking 1%, 1%, 1%, 1%, 1%, but then you have a couple of or sequence of winning trades which make 5%, 10%, or 10 to 1, 5 to 1, that makes sense. Then, you know, your 5 losing trades are paid off by 1 winning trade with 5 to 1, and then another 5 to 1 gives you a 5% return. That makes sense. So what you can control is money management and risk management, but you cannot control, will your very next trade be losing or winning trade. But to flip it as well, if you have a sequence of losing trades and you're following the same technical mechanical system that you always did, it doesn't necessarily mean that the very next trade that you place will be also a losing trade. Markets are random and we have no control over that. Now, Philip, shut up about this stuff and let's talk about the markets. Okay, let me just see. Was this good? Was this good enough, guys, before we go into the markets and go and check a few things? Okay, guys. Now, Philip, can you explain what the swap cost is for on my account active trade summary? No, I have no ability to talk to you about Paul. There we go. If you call your account manager, they'll be able to explain it to you, because they are working for FxPro. They are your broker. I'm not your account manager. I am an external market analyst. I run a company called TraderCast, and you can have access to that through FxPro. But that's the safer option for you would be if you speak to your account manager, and they'll be able to sort it out for you. Now, let me just go into the live markets and see. Email is philip@tradercast.com. Daniel, if you wish to come and join us on TraderCast, we do daily broadcasts which last for about 5 hours, from 9:30 until 11, from 1:30 until 3:30 UK time. It's a community of traders. You can register and you can put FxPro in the introducer field when you go to tradercast.com and click on sign up. And then that'll take you to the payment stage. When you come to the payment stage, log out. Do not leave your card details. I would check with your account manager at FxPro if you qualify to get trial access for about 30 days. And if they tell me that's the case, I'll email you and activate your account. You're more than welcome to come and join us. It's absolutely free to you, provided by FxPro. But Daniel, thank you so much. Now here we go. Let's go and talk about this. I can see some more people coming in late, but what we are seeing here, this is euro dollar, this is cable, this is dollar yen, this is euro sterling, pushing lower, Aussie dollar, dollar CAD, WTI, gold, UK 100 IE FTSE, we have S&P, Dow Jones, and German DAX. Before I go and talk about anything else on the markets, I do want to point a couple of things to you. Guys, I'm not really sure if you know this, but basically when you go to your FxPro kind of a landing page, your website, your FxPro website, you have access to this trading tools here, and you have economic calendar. And if you click on that, that will give you the calendar for the day or the week ahead. So I'm not really sure if you're aware of this, how many of you are brand new, but this week is fairly specific because we have Easter holidays, and US markets and European markets are closed on Friday and also on Monday. So let me just actually go here and show you this week calendar. So economic calendar is very, very thin this week. There is nothing major going on, nothing significant. But the next week we'll have non-farm payroll, and we have a special webinar on Friday, 6th of April at 12 o'clock, 12 noon UK time, ahead of non-farm payroll, US unemployment, which will significantly increase the volatility in US dollar currency crosses, in gold, in equity indices like Dow Jones and S&P, quite likely in crude oil as well. But I would like you to come and join me, and I will try and have my camera plugged in at that time because it's midday, and I'll be likely be on a trading desk in the office rather than doing it in the evening. So it will be good if you can come and join us, and those events are usually quite busy. There's a huge amount of people in the chat rooms, and everybody's chatting and pointing to stuff. So it's 6th of April. You can register for that on FxPro website. Alternatively, you can call your account manager and ask them for that. But basically, from the economic calendar this week, you have very, very little. There is nothing major going on today. Today we had crude oil inventories, which came in at 1.6 million barrel build. Expectations are that we would see the draw of 0.3 of a million barrels, but this was bearish for crude oil, and I'll show you how that actually played out. You can see this immediate sell-off here in crude oil as a result of these numbers, and I'll talk to you more about that in a minute. But where am I now? Here. So apart from that, tomorrow there's some Japanese data, retail trade. If you're trading Japanese yen crosses, so dollar yen, sterling dollar, sterling yen, euro yen, anything yen, that could possibly move, but that's going to be about 1 o'clock in the morning UK time. Majority of us will be asleep if you're UK based. The other thing that's actually going to move the market from the data point of view, we have mortgage approvals, GDP, for UK, so if you're trading sterling, dollar, euro sterling, and I'll talk about that in a minute, because we have a fairly substantial pressure in sterling dollar here at the moment, and we also have a nice pullback in euro sterling at the moment, and there's some really decent levels around this 87.50. There is a couple of major investment banks looking at that level from the bearish point of view, possibly looking for 85s and even 80s to the downside, which would equate to 250 to 700 points lower on euro sterling. But I'll talk to you about that in a minute as well. It's not a problem at all. Let me just go through the calendar very quickly. So that's on Thursday in the morning, 9:30 in the morning. The other thing that could be of interest if you're trading euro currency crosses and also German DAX, which is equity index, is at 1 o'clock. Consumer prices in Germany, that's coming up. Expectations are that we will receive 1.6% versus 1.2 was the previous number published as well. And then 1:30 in the afternoon, core personal consumption in US, some Canadian data, but nothing, there's no major data, it's just a GDP reading month on month. And Friday, you can see that markets are active in Asia, and then they are closed in Europe, and actually globally they're closed in most of the places, because it's Easter holiday, beginning of the Easter holiday, and markets are also closed on Monday as well. So US markets and European markets are closed Friday and Monday. So normally liquidity dries up ahead of these kind of a big long weekends, and markets can go in a bit of a lull, and even a small amount of liquidity coming in can cause exuberated moves. So you have to be very careful. The other thing that you should be aware of as well is that this Friday is actually the last trading day of the calendar month, which is March, but also the quarter. So we have a month-end rotation and a quarter rotation. What I mean by that is big mutual funds and investment funds, especially in US, what they do is they monitor their portfolio, investment portfolio, and at the end of the month, they reassess everything, and then they liquidate a worst performing constituents of their portfolios. They go in cash, and then they redeploy that cash on the first trading day of the following month, which will be in our case Tuesday of the next week, because markets are closed on Monday. But this time it's even more significant, because it's not just the month end, it's also the quarter end, so January, February, and March. So that could cause even more significant moves tomorrow ahead of that last trading day of the calendar month. So please be careful, guys. This is more from the kind of macro point of view and fundamental point of view rather than technical, but I'll show you some technicals as well. So be careful there. That's very often the case. Very often the case. Now, before we do anything else, I do want to share something else with you, which I think could be of interest. This is blog.fxpro.uk. You can go on that website, and there's plenty of market analysis throughout the whole day. They start early in the morning, giving you the summary of the macro story and what happened overnight, and then they also give you what's coming up during the day. You can click on this and read more, and then they also give you a technical analysis, and in this case this was sterling, and then this here was WTI and Brent and so on. So if you click on that, it opens up, it has a little summary and a chart with some lines and levels, and it's a good start if you're looking for a good start of your day, or if you're looking for anything in particular. You can come in here, FxPro blog, and you can just get a very quick summary, a chart with few levels, prevailing trends, and explanations why something could be of interest. But just thought I can run this by you. Now, I can see quite a few guys in here now. Do you want me to cover anything in particular? Are you more of a kind of currency guys, or shall I go through the economic calendar and then show you what's happening with the market in general? And while you guys are thinking about it, I might as well start with something. And what I would like to start with is dollar index, because that's actually quite telling at the moment. Do you guys know what dollar index is? Dollar index is an index that follows the movement of US dollar currency against the basket of 6 other currencies, against euro, sterling, Swiss, Japanese yen, Norwegian krona, and Canadian dollar. So majority of the people who are trading currencies are keeping an eye on this financial market. It's traded in futures. They don't necessarily trade this market because the spread is quite large, and this is traded in futures, but they're using this as a indicative guidance, as a correlation to what euro dollar and sterling dollar and dollar yen and dollar Swiss and dollar CAD might do. Okay, so basically this is showing us a substantial downward pressure in a dollar index in monthly and weekly time frames. So we have 20 period moving average, 50 period moving average, 200 period moving average, and the price is selling off. Now, we are coming to some fairly substantial support areas for dollar index, and in US, Federal Reserve is starting to hike rates, and they say they'll carry on hiking it for 3 times. Plus, we are reaching this 61.8 fib retracement. So this is a 61.8 retracement of this impulsive move higher. So bulls are basically looking at the cluster of these lows, thinking that if they hold, that would be a significant support area for them. So if I go down to a daily time frame and show you what I mean by that, is this area here is significantly important support zone. Okay, so 88.60 down to 88.10 down to 88. Dollar index is under pressure below that level. However, if we see a confirmed breakout, so this is resistance, resistance, resistance. If we see a confirmed breakout in dollar index above this area here, which is, and what I'll do is, let me just change this into red and make it better for you to see. So there's is there one called plum? I don't know if that's too dark for you. Maybe it's too dark. Let me know if you can see this area correctly. If we see a breakout above this zone, so something like this might happen, a breakout into this zone here, a retest again, something like that, and then a spike into that zone. Only a confirmed breakout above this zone here, which is 90, 90, 20, 90, 60. So this is our resistance, would indicate that bulls are in control and potentially dollar is breaking out higher. And if dollar is breaking out higher, that puts a downward pressure in euro dollar. It puts downward pressure in sterling dollar, i.e. cable. It becomes very bullish for dollar Japanese yen. It becomes very bullish for dollar Swiss. It becomes very bullish for US dollar, Canadian dollar. Do you understand what I'm saying here? You guys are all very cool and quiet. So is it all okay? Brilliant. Okay, so keep an eye on that. Keep an eye. So whatever Federal Reserve does or says, it's usually very, very important. And I would like to say that dollar index is currently capped by this 89, 80 area, 90 zone. But if we see a confirmed breakout higher, then that would open up the way for the retest of these further upsides towards 90.60, 91, 91.50, even 92.70, which is the cluster of these previous lows. Look, touch, 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 touch. Resistance. Support, 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 support. Broken. Boom. So if the price goes there, it's likely that we'll see some sort of consolidation again. So that's the logic behind it. Now, let's leave this dollar index, and this is dollar index in end of day time frame. So bearish below here, bullish breakout higher. Now let me see how that translates to euro dollar, cable dollar yen. You can see that move that we've seen here from the intraday point of view. So the move that you're seeing here in US dollar index is translating as a significant breakout in dollar Japanese yen straight away. Okay, and this is very, very telling. So look at this green candle. Look at this massive green candle. Now we were looking at these areas here as an areas of resistance, and they're all challenged now and broken. So now what we need to do is we need to rearrange them, and the previous resistances become newly found supports. So basically what we are looking at now is we are looking at this zone up here as a major resistance. Okay, we are looking at this zone up here as the immediate resistance, and we are looking at this zone here as the initial downside support, and this area here as initial support, and this area here as a support. Okay, so dollar yen is reacting very bullishly to that US dollar index breakout. Now this is dollar Japanese yen in end of day time frame. So each candle is one trading day. So this is a massive bullish breakout. The name of this candle is Mirabuzu. This candle is really large. You don't get them very often, but when you do, you'll see that they do not have any wicks on either side. They're just very powerful, either green or red candles. This is telling you that basically bulls are 100% at this point in time regarding dollar Japanese yen. And that corresponds to this breakout here that we saw in dollar index. Now, let me just go and cover this properly. So from the intraday point of view, guys, from the intraday point of view, dollar Japanese yen appears to be bullish above 106.50. Breakout above 106.50, which represents an initial downside support, is initially capped by this falling 50 period moving average. So I'm using 20, 50, and 200 to give me the trend. Initially capped by resistance at 106.90. Breakout above 106.90 would open up the way for the retest of 107.30, this area here. A breakout above 107.30 opens up the way for the retest of 107.80, followed by 108.50. So that area here. Alternatively, if the price comes here and starts selling off, or starts selling off from here, bulls will definitely look to test this area here, which is shaded blue, as the initial support. So some profit taking here, pull back to that breakout level. There's your 200 period moving average, and then a push higher as well. only a confirmed loss of this area here below 106.50 would negate the existence of this bullish breakout, and then this will become something else, potentially targeting further downside support towards 105.40, 104.65. But at the moment, this appears to be a bullish breakout. So high, lower high, low, lower low, lower low, lower high, lower low, lower high, lower low. Is this the first significant breakout and a higher high, which has a higher low, and then it goes in reverse? So that's dollar yen. That's dollar yen, 4 hourly, hourly, and then also 15-minute time frame. All very, very bullish, all very, very telling that US dollar strength is intact, as we've seen in dollar index, and as we've discussed already. You are very cool, guys. You are very quiet. I'm not really sure if this is hitting the mark, or is this too complicated for you? Now, let me just show you a euro dollar. Okay, now we are seeing a massive reversal in euro dollar. This is euro dollar in end of day time frame. Now, let me just show you exactly what's happening here. This is dollar index. This is dollar index breaking out higher. Dollar index breaking out higher. That immediately translates to euro dollar pushing lower. Okay, because in this case you have euro against the dollar. So dollar strength means this is going lower. Okay, all okay with this so far? Now, let me show you how this looks from a longer term point of view. This is a daily time frame for euro dollar. The price action is currently mixed with this red and blue line, which is 20 and 50 period moving average. And then we have 200 period moving average here. We also have this rising support trend line. That rising support trend line is really, really significant for euro dollar. Now, the initial support was up here, and that's currently lost. So really, that support is no longer support. That support is taken, and the next level of support. I'm just trying to see if I can move. Here we go. Is down here. Okay, so that's the next level of interest for euro dollar. If the price goes to that level down here and starts bouncing off that level, then that longer term trend is still intact. Okay, that longer term trend is still intact. Alternatively, if that doesn't hold, then it becomes quite ugly, and we see a substantial sell-off lower, and that lower sell-off lower could possibly target these areas down here. So we have a loss of this 122.75, followed by 122.16, 121.80. 121.80 is absolutely huge level, because then all of this becomes a significant topping pattern. So, but in order for that to play out, the price needs to dip lower, and stay below this shaded area. Then this becomes a shoulder, head and shoulder, or triple top, or multiple top, or something like that. And then it opens up the way for the retest of this downside support towards 122.65 or thereabout. Alternatively, from the intraday point of view, if the price goes to that rising support trend line and some willing buyers come back in and support it, or we see a reversal in that dollar index, so dollar index goes to 90 and gets rejected there, then you could see a bounce back of that 122.50, 122.75, and euro breaks out higher towards 123.48, 124.60, 125. Only a substantial and confirmed breakout above 125, so end of day close above this shaded area here, would open up the way for the retest of additional upside resistances towards 125.36, 125.55, and 126. Bearish below here, bounce of here supports that longer term prevailing trend in end of day time frame. Okay, you are all still very quiet. Now, if you want me to cover anything, please ask. Now is the time to ask, because we are coming to the end of today's broadcast very, very quickly. Yet again, translating all of this, that dollar strength to Canadian dollars. So you're seeing Canadian dollar rally. And if I want to show you what Canadian dollar is doing at the moment, I would like to show you this as a breakout. This is a breakout at the moment. Okay, so we're seeing a breakout higher above this falling resistance trend line at 128.86. As long as the price stays above 128.86, this area here, it opens up the way for the retest of this further upsides, and this is the hourly time frame now. So breakout, retest, and the move higher towards this zone here, which is 129.36, 129.48, followed by 129.76. These areas, now some of you are scratching your head saying, why is he's got these lines plotted on a chart, and it's just, why? Okay, let me show you why. Do you see now? Fib from the swing high to the swing low brings you 38, 50, and 61.8 fib retracement. If I zoom out and bring this to a larger or a longer term time frame, you can see that these red lines were actually tested in the past as a resistance and also as a support, Market traders have ability to memorize the levels at which the price consolidated or at which price was rejected or bought in the past. And the logic is that if the current price hits that level where the price consolidated at some point in the past, it's likely that it might reference it again. What do you think about trading in 1 hourly time frame against the daily signals, taking about euro dollar? Ionis, sorry, you mean to short in 1 hourly? Is that what you mean on euro dollar? Sorry, let me just finish this. You mean if 4 hourly and daily are uptrending and you want to short 1 hourly, is that what you're saying? No, to go long. Okay, well, you're not going against, you're going in direction. That's okay. Look, let me show you. So his question was, look, daily is uptrending. This is euro dollar. So daily, we know that daily is uptrending. 4 hourly is also uptrending. Okay, 1 hourly is selling off. So when 1 hourly candle comes down here, only down here, not at this moment, it needs to go down here and creates something like this, a piercing. it creates something like this. Red candle followed by spinning top or hammer, or doji followed by green candle, which is same and equal size to this one, which is called the star reversal here. If the price comes down here and creates a bullish engulfing like here, if the price starts selling off and flush is lower, buyers come in and has a big wick and a green candle here, something like this. So let me show you, for example, okay, so like that, but it happens to be green. Okay, so let's make it exactly like this. So green with a little wick down here, okay, or something like that. So a hammer at the support. So the price flushed lower, but then it closed, something like that. But here, not at this point in time, okay, in 1 hourly, not in 1 hourly. Then you know that the trend is still intact, and this 1 hourly corrective move against the prevailing trend, which is uptrending, is finished, and buyers are coming in and defending that level. So that's, I understand that logic. Okay, if you want to trade in a shorter term time frame, then what needs to happen is you need to go and say, is there another support down here somewhere? And that support could be triggered in 4 hourly or hourly, but then with a 15-minute possible entry. So you have this trend line here. You need 3 touches for this trend line to play out. That's why we have this 122.75 level. Okay, so if you go down to an hourly and you see a flush lower, and this flush lower, when you open this here, this looks like a bearish continuation pattern. So let me show you what I mean by that, okay? So bearish continuation pattern looks like this. And they tend to play out all the time. They're called flags, pennants. So you have this many points flush lower. So there is a symmetrical move. So then you have this many points into this consolidation here. And this consolidation here needs to play out as well as it is. So then you have that consolidation, and then you take the same amount of points and then you extend it down, and that gives you the next level, which is 122.87, 122.90 or thereabout. So something like that. So then you have this leg lower consolidation, leg lower consolidation, leg lower consolidation, leg lower consolidation, leg lower, and then it hits that 122.75, and then it could possibly, in theory, something could happen there as well. But that support down here at 122.75 or lower is more significant, more significant. But you must wait for a confirmation of some sort. So you could have an indicator of some sort there as well. So you could have, I don't know, let me see. You could have your stochastics, or the colors okay? Yeah, okay, good. So you could have your indicator here as well. And then when this price goes down here and this crosses and goes to neutral and crosses from neutral, like it did here, for example, or go into oversold and crosses from the oversold and then go up. That's one thing. The other thing that you can watch as well is you can have divergences. And I don't know how experienced you are, guys. I'm really sorry. I'm planning to do these webinars in 2 different ways, to have these webinars for beginners and for more advanced people, because I might be alienating some of you by what I'm talking about right now if you're not familiar. So for example, you have divergences. So there is the price that's creating a lower low, and you have your indicator that's creating a same low. So this is known as a divergence, and then you see a breakout. And I can show them to you over and over again. So there is a divergence here as well. Okay, there is a divergence as well. So you can see this happening over and over again. So you must have some kind of system that you've measured and tested, and you have audited track record of your triggers, which are based in some kind of technical nature before you can engage. Don't just buy blindly for the sake of it. and hope for the best. There has to be some logic behind it. And the other logic that you should pay attention to is what's in the economic calendar. Okay, so there is nothing now in the economic calendar that might trigger volatility in euro dollar. The dollar is all finished. FOMC member was speaking tomorrow. There is nothing here from the Europe point of view. There's something about UK, and then you have this core personal consumption expenditure at 1:30. So it's possible that tomorrow at 1:30 in the afternoon, you could see a volatility in euro dollar. Okay, so that it's possible, because that trigger, if the actual figure comes in much better than 1.6 forecast or much worse than 1.6 forecast, that will likely trigger either a buy or sell in the actual dollar, and that will be immediately translated into euro dollar as well. Very, very likely. So you must know what's coming up in the economic calendar at what time that could potentially increase the volatility in the financial market that you're looking to trade and so on. Guys, towards the end you started asking good questions. I would like to encourage you to go and do that more. I'll share something with you now as well. But so we have a webinar, which is a non-farm payroll webinar on Friday, 6th of April, and you're more than welcome to come and join us. It's midday, 12 o'clock. Alternatively, if you want to come and join us on TraderCast, you have 30 days free. Just speak to your account manager at FxPro, or go to register on tradercast.com and put FxPro in the introducer field. We'll check with your account managers at FxPro if you qualify, and then if you do, then we will activate your account. It's not a problem at all. Just very, very quickly, guys, indices are going sideways, DAX is going sideways. One last thing that I want to talk to you about as well is gold. Yet again, all linked with dollar. We are seeing dollar moving higher. We are also seeing a gold moving lower. Why? Because gold is traded in dollars. It's fairly simple. There is no, there's nothing special there. If we are seeing equity indices go higher, gold goes lower. If we see a rally in US dollar, we are seeing a bearish. Sorry, I'm just trying to do this quickly. I know we are coming to the end of the broadcast. We're seeing a bearish pressure in gold. So basically, the big level, the big level to watch for gold is at 1320. Loss of 1320 would open up the way for the retest of 1316. Loss of 1316 opens up the way for the retest of 1310. Below 1310 we have 1306. Below 1306 we have 1300 to the downside as a major support. Why? It's a nice and round number. So this area here is of a significant interest to the gold traders. Alternatively, if we see a bounce of that level and a move higher, then the initial upside is capped by 1331, 1340. Breakout above 1340 would open up the way for the retest of this zone up here, 1356, 1360. 1360 on the upside, and this is gold in 4 hourly. This level is of particular interest to the FIB traders as well, because it's very close to this 61.8 FIB as well. So it's a good level to keep an eye on. This is the hourly time frame. For gold, we are seeing a loss of that support, and when we talked about continuation patterns, loss, small rally, support, double top, loss, retest off we go lower. Some buyers might be returning here. Keep an eye on this 1320 area. It's very, very, very important area as well. Before we go and do anything else, just want to go back to this disclaimer. These are just my opinions and experiences. Thank you so much for your great questions, guys. And we do this every single Wednesday. We initially started this webinars on Wednesday midday, 12:30. We are trying to get some consistency now in the evening to see how that works. I would strongly encourage you to go and speak to your account manager and tell them if this is better for you, or would you prefer to have the midday. If so, then we can rearrange them. And as I said, I'm looking forward to talking to you guys next Wednesday in the evening at 7 o'clock, same as now. And also next Friday, 6th of April, midday ahead of non-farm payrolls. So thank you for watching. Thank you for listening. Stay safe. Thank you, stochastics, question mark. Kevin, okay. As I said, I have no idea, guys, what your level of experience is. Some of you could be brand new, and I hope what I'm doing here is giving you a good level, a balanced view. But you need to come and talk to me. Come and talk to me in the chat rooms. Otherwise, I don't know if I'm giving you what you need. Thank you for watching. Thank you for listening. Stay safe and happy trading. And I'll speak to you all next week. Alternatively, I'll speak to some of you on TraderCast tomorrow. Thanks. Bye.